Good afternoon, everyone, and welcome to today's webinar, Beyond the Bricks, Innovation in Residential Asset Management. I'm AJ Chand. I'll be your host for this conversation. I'm the CEO of Rezo and also a director of the Proptech Association of Australia. Before we begin, I'd like to acknowledge the traditional custodians of the land on which we meet today. I pay our respects to elders past and present, and extend that respect to all Aboriginal and Torres Strait Islander people joining us today. Today's session is all about residential asset management. It is no longer just about building itself. It's about delivering smarter experiences, using data intelligently, and building for the future. We're lucky to have three incredible guests with us, each bringing a different lens to our conversation. We've got Kelvin, with a focus on the rise of build-to-rent and multifamily as a residential asset class. We've got Joe bringing insights into how data, buyer behavior, and environmental risk factors are shaping smarter decision-making. And Angus sharing expertise on how asset operations are innovating to create a better performing portfolios. I'd also like to thank the fabulous support of Stone and Chalk, who make our panels possible. For those of you who don't know, Stone and Chalk was founded as part of a not-for-profit in Sydney in 2015 to help fintech startups commercialize and grow. From 40 startups in 2025, it has now hundreds of startups in Sydney, Melbourne, and Adelaide, covering all areas of emerging technology, including PropTech. I'd like to, again, thank our panelists for being here today. I really appreciate your time. To kick things off, I'd love for each of you to give us a short elevator pitch, just a quick introduction about your role and the business you're part of. We'll start with you, Kelvin.
Sure. So I've been working in, commercial real estate for 15 plus years, and maybe 3 or 4 years ago, Yardi asked me to take over the build-to-rent market segment. And so I've been leading that over the last couple of years and trying to grow our market and look after our clients in that space. Essentially, we offer an end-to-end solution from marketing websites to online leasing applications, all the way from a financial accounting system and lease management system, incorporating facilities. Essentially, we call ourselves a one-stop shop.
Excellent. Thank you for that, Kelvin. Now to you, Joe.
Sure. So hi, everyone. I'm Jo Agresta. I'm the CEO and co-founder of Abodi, and we're on a mission to make the property journey simpler and smarter. So not just for home buyers, but also for professionals who support them. So on our B2C side, we've built Abodi AI, a mobile app that helps everyday home buyers match with the top 5 properties on market, tailored to their budget, lifestyle, and property wants and needs. And just this month, we've launched our new B2B product, a tool designed for mortgage brokers, buyers agents, and other property professionals to prepare, analyse, and personalise property reports faster in their own branding. So it helps cut through the time-consuming data crunching so professionals can focus on what they do best, client relationships and strategic advice. So at the heart of what we do is we believe that data should build trust, and the right insights are delivered at the right time to help people make more confident property decisions.
Excellent. Thank you for that. And to you, Agnes.
Perfect, AJ. So I'm founder and CEO of Assetti. We're a platform that essentially helps people predict, plan, and operate their property assets, particularly across large portfolios. So we take spatial data, a range of sort of data sources, and use that to model the asset, both sort of visually and otherwise, to predict what's going to happen with it, and then as those changes occur, allowing earlier intervention and therefore reducing the sort of cost to manage these assets across really large geographies and areas.
Excellent. Thank you, guys. And again, I appreciate you being here today, and I think it's a very important discussion to have. There are, obviously, we all deal with residential asset classes, and being Australia's biggest asset class as well. Kelvin, let's start with you. How is build-to-rent and multifamily changing the way we think about residential asset management today?
So I guess the major difference is it's purpose-built for a large volume of customers or tenants. So traditionally, it's been mum and dads renting out a property, a single-family home, or maybe some strata buildings, but build to rent goes to a whole different level, between 200 units to 800 units in a building, and really providing a different level of service. So ensuring that your clients are actually happy with that residency, providing maintenance, providing amenities. So we've seen the first sort of stage of build to rent or multifamily. It's really been a race to arms, so to speak, in terms of providing that level of amenity. And it's probably at I guess, a premium renter at the moment. But over the future, we're definitely going to see that change and evolve. And we're sort of seeing it start to happen now, where skilled workers and affordable rents are being provided to different people with different services too, to ensure that they can actually work in the city. And that will continue to grow, push out into the suburbs, and really provide a different level of service than what a traditional renter might have gotten in the past.
So this whole idea of build to rent, obviously, it's creating long-term rental relationships. Obviously, it's very needed, right? Like when we look at our vacancy rates and we look at how we're not delivering on the construction quotas needed to house all Aussies and also to sustain immigration and sustain the population in the long term. Now, build to rent, well, I personally started hearing about build to rent about 5 years ago, 5 or 6 years. I think that's when Australia became, well, there was a lot more headlines capturing build to rent at that time. So just give me an idea of how it's evolved over time, right? Like we heard about this 5 or 6 years ago, and we knew it was a necessity, and then we saw some really big players in this as well, and obviously Yardi's in this as well. And so, can you just share a little bit of an insight of what Yardi sees this space looking like, say, in the next 5 to 10 years?
Absolutely. So I guess when we talk about it 3 to 5 years ago, there was a couple of players that started looking at it, and we had that great big building go up in Sydney to sort of put build to rent as a concept to everyone. And it sort of provided a proof of concept which enabled a number of, I guess, institutional investors to come here and fund some of the local players to have a go at it. And there's been some roadblocks with COVID and construction and everything else. But in the last probably 6 to 12 months, we've seen a number of buildings go online, to the point that we've got about 8 to 10,000 units in the market now, and really showing us that it does work. And what's going to be really exciting is over the next 3 to 5 years, there's actually another 25,000 units that are planned. And if we look at research from the UK and where things have gone there, if we look at Australia, we're probably about 7 to 10 years behind the UK. And the UK now has a couple of 100,000 units. So if we follow that sort of same trajectory, it's really going to be a game changer in terms of offering a number of different buildings and services within those buildings, and a whole different market segment for property.
Yeah, that's an interesting point, because UK was having the similar problem to us, or having the same problem as us in terms of housing and having enough affordable housing out there as well for people struggling to find rent and having very low vacancy rates. So when it comes to build to rent, like you said, they're obviously big players, and we are trailing UK, the likes of UK, to see what's possible in Australia. Can you share a little bit about what you think the future renters or even current renters think about build to rent?
I think it's really widely misunderstood still, and there really needs to probably be a bit more of an information campaign or an explanation to people about what it is. At the moment, I can very much understand that people feel like it's a premium product, that no one can afford it. And that's probably true to the extent of the buildings that are in the city. They very much are created to single income people or double income, no kids. But it will evolve. If you look at how it's been in the US, there very much has been a lens on affordable, social, and key worker housing. And a lot of the major players and investors have actually spoken about, in the next 5 to 10 years, or even before that, they'll look to go out into the suburbs and build out there with probably less amenity and become a lot more affordable. So we'll be part of that package, or part of that solution to solve that housing shortfall in the future.
Yeah, excellent. Thank you. I think it's actually very, very much needed. I think that when build to rent came out, I think everyone was very excited about it, and I think A lot more, especially governments, need to get behind it, simply because we do have a housing crisis, and it's not just across, normal Australians. It's also social housing and things that maybe could be solved as a result of build to rent in the future. So I do thank you and thank you for your time, and I'll come back and we'll have a chat more about this. Joe, turning to you, let's just sort of change from build to rent and into data and insights. And we know that there's a lot of companies in Australia that focus on data and insights. But from your perspective, data and insights are often talked about, but not always fully leveraged. Right? Where do you see the biggest opportunities right now to turn data, buyer insights, and environmental risk factors into smarter property decisions?
Great question. I think the biggest opportunity right now isn't about having like more data. It's about interpreting it faster and smarter so that it becomes genuinely useful in the decision-making process. So like I always explain it like this, like you've asked me a question like this one. So I'm not answering straight away. I'm thinking, I'm pulling together different experiences, facts, and data points to give you a meaningful response. Data works the exact same way. So it needs context and it needs processing to give you the right answer. So to give you an idea, before we built Abode, I was working as a buyer's agent and I would like to prepare personalised reports for a client. One report would take me 13 hours after I'd done all my analysing of different data platforms. So pulling from, different providers like CoreLogic and Landchecker, and then processing that information and putting it into a meaningful report. But, and this is key, AI won't be there to replace the professional, because now what we've done is I've built a system that allows me to analyse all that data quickly, give meaning and give context, and it's analysing thousands of data points at one time rather than me sitting there as a person trying to interpret it. So if I look to the future, I think where we're heading is a place that you need to be able to use the data, the insights, and the aggregation of that data in a meaningful way that draws conclusions quickly, so you as the professional can get going and do the thing that you're good at, which is servicing home buyers and clients and asset management. So it's really a tool for efficiency. So when they talk about, AI is going to be, we're going to have AI real estate agents, AI buyers agents, I don't think that's true. The human element is huge. It's still there. It's not emotional AI, but let's use it and leverage it in a way that's going to give you all the data and insights that take you hours to analyze and draw conclusion from. And let's be real, you still miss things when you analyze data as a person. If you're tired that day, if you had enough coffee or you had a big weekend, all those things play into the factor of data interpretation. And with a machine handling that mass volume of data, you can then use it to your advantage, present it to a customer with personalized insights that's really custom to their situation, and you're going to have a much better experience, a happier client, and you can service at volume.
Yeah, I think it's very important what you said. I think we deal with Proptechs, within the Proptech Association all the time, and there's an evolution of obviously artificial intelligence being used across a lot of SaaS platforms. And I think as AI evolves, the human connection becomes even more important, because you would pretty easily see a saturation of AI-fed information that's out there, and then that's where I think the humans become important. Obviously, it's used for research, and obviously we're using it to drive conclusions on different data sets that we feed it. But I think it's a very important point that the human element is not lost through that as well. So when we look at on how your company is leveraging some of this or solving some of this, can you share some insights into how you are using it currently?
For sure. So the way we've used it, I'll use the example of our B2B product that we launched recently. So we have professionals that come to us who are time poor, they're busy, and they service only a low amount of clients. So what we've done for them instead is, their problem is that they'll sign up to maybe 3 or 4 different data providers, and then they'll get access to all the tools that they need. But every data provider, you don't often utilize every single tool that they offer. You'll utilize maybe 1 or 2 features, 1 or 2 data points, and then you do offline, you then go and create the reports manually and put in all the data points you want. But in those reporting systems, not that they're bad, the data sources are fantastic. The problem is that you're then interpreting the information yourself, and then you're trying to draw a conclusion and explain it to a client. And on top of that, it takes time to prepare those reports. So as we know, clients change their minds like the wind. So what ends up happening is you provide that report and that client 3 days later has already inspected the property, or maybe they've already made a decision, and that report's useless, but you've spent time, money to get it. So what we do, and our heavy focus, is customization. So when we ask questions to the professional about their client brief, we ask them really in-depth stuff like lifestyle preferences, their property goals in terms of, like, are they buying for tax depreciation purposes? Are they buying for cash flow? What's the asset purpose? Where do they want the asset to grow in the next 5 years? And we really get this detailed picture of what is their brief? What are their goals for the future? What are their goals now? What do they have? What don't they have? And what are they missing? Then what our algorithm is designed to do, based on data sets that we plugged in with Proptech, ABS, Land Checker, and Hotspotting, we use those data sources as our credibility and our safe, because the algorithm is not just plugging it into ChatGPT and pumping out a response. It's actually trained on a data set. So the way the data set operates is we get that information about a client brief, and then we're personalizing it to that client to go, well, okay, here's potentially the top 5 properties that look really good, look like really good opportunities, and here's why. The rental yield is this. The sales performance over the last 20 months was this. And on top of that, we explain why. So we don't just present a graph. We don't just present a data point. Like, we don't say it's 28 days on market, good luck. There's been a trend of 4.5% rental yield over 6 months. We don't just give you that, we explain it. And that's the power of what we do. And that's how we use data, because even as a professional, I want to be quick. I want to draw that analysis quickly to service more clients. On top of that, my client doesn't want to wait a long time for a report and then sit down in a meeting after they've worked an 8-hour shift and hear me talk about data and interpretation of that data when it goes over their head. This way, it's no jargon. It's in terms they understand, and they can contextualize it and make decisions. So we use property data to help people make faster decisions, not just to make them quicker, but to actually get them to the point, like, of, I hate this house, I love this house, love this opportunity, hate that opportunity. That's a win for me.
Yeah, it's a great point as well. And I think the way all of us are consumers as well, right? We have access to a ton of data, like from free sources of data, like domain and realestate.com, and we can go in there as individual buyers and have a look at all of this as well. So it's very important that the buyers agents are not only just getting the data points, but explaining the merits behind that data point and explaining the opportunity or the threat behind that data point. That's very important in my opinion. I think it's and as it evolves more as well, I think we have all these big data silos, right? We have all this data that are stored everywhere, but yet I don't think apart from companies like yourself and a couple others out there, they don't really quite do a good job of visualizing that to the end user. And I think as technologists, I think that's a very critical part of our role, is to visualize the data and the opportunity and everything in a very simple UI to the user, to explain what we actually mean. So thank you for that, and we'll touch more onto that straight after that, towards the end of this as well. Angus, moving on to you. When we think about operations, the engine room behind great residential assets, what innovations are really transforming how assets are run, and where are we still seeing the biggest gaps, you think?
No, it's a good question, AJ. So I think, carrying on from what Joe was sort of talking around, using data to provide a customized experience, it's actually a very similar thing, but for the asset itself. And so previously, I think if you look at how systems have been constructed over the years to manage assets, a very human sort of centric approach to it. So this is the human process, this is the finance function, this is, X, Y, Z that needs to be fulfilled to run this asset. But just like people, these assets live and breathe in their environment. If I put you, AJ, out in the world for 50 years and I wouldn't be getting you back the same way you looked when you went out there, you'd be feeling a bit wet. And it's the exact same thing. And so using data for, I guess, our customer is the person owning or operating that asset. But the stakeholder in that process is the asset itself as well. So providing a very stakeholder-centric approach to using data and making these decisions as quickly as possible. You don't, I guess, in terms of asset management, doing nothing to maintain your asset is a completely fine asset management strategy. That's actually a very sound asset management strategy in some, some specific scenarios. But if you are trying to run an A-grade asset, or you're trying to run a specific investment strategy that runs contrary to, then that's where you need to understand sooner rather than later that things need to be done. And so from our point of view, at ASETI, what we're doing is taking essentially massive related data sets, enriching from those condition information, anything that sort of relates to the operation of the asset itself, and being able to furnish those decisions sooner. So that could be something around a defect or a replacement, but it could also be around an environmental license on an asset that by doing X, Y, and Z, you breach. And the customer doesn't know that because it's buried in 500 pages of information. But all of these are actually still very essential to, at the end of the day, delivering the internal rate of return that a customer requires on their asset. And so, yeah, here in Australia, multifamily, build to rent, that sort of class as a whole is quite a new concept in the way it's sort of operating now. But as sort of Kelvin was touching on, in the UK and the US as well, it's a very established asset class and performs very, very well. Like the conference a couple of months ago in the US, and they were talking about the sort of resiliency of build to rent and multifamily in the sort of eastern and southern states in the US. Just no matter what an investor was doing, basically, they just continued to generate money out of it, even if they were absolutely just ham-fisting their acquisition and things there. And so that's where then, building these additional amenities in, particularly as Kelvin was touching on it, and using that as the investment strategy. Okay, well, I know that if I add this this amenity, or if I do these investments in the asset, I know it provides this uptick to the base rent, and therefore using that across a really large set of properties. So in ASETI, we're probably at 250, 300,000 properties that are managed live in the system at the moment, and they're all benchmarked then in the asset. So every customer receives a benchmark against everything else in the portfolio, saying, okay, well, this is your asset benchmarks at 2.5 out of 5 compared to what everyone else's assets in the same category globally are actually playing in. And that's a really massive improvement, I guess, using this data all the time, rather than going, okay, well, I'm going to do a 5-year inspection strategy, or these are such human-centric things. Some assets don't need to be inspected for 10 years. Other assets need to be inspected monthly or daily. And so providing that hyper-tailored experience for the asset itself, I think, is certainly a trend that we're trying to push, and a strategy we're trying to push with customers around data, but also more generally, I think, as data sets become more prevalent, that's a strategy that is more easily implemented at a cost base that's palatable, I guess, for a customer.
Yeah, you raised some interesting points there as well. Like, I was in real estate, and then I went into facilities management there for a while, and I found that role was one of the worst I've had. It was because there was no data to rely on. All assets were so different, and you would have to go through tons and tons of contracts, paperwork, lease agreements to figure out what this asset could be used for, can't be used for. What kind of maintenance schedules you need for it. There was a whole variety of issues, I think, that facilities managers and asset managers these days face anyway. So having a spot or an area where you could easily look at what the requirement for this asset is, or this building is highly beneficial. So from that, what kind of cohorts do you service right now? Is it facilities managers, asset managers, owners, or how deep does it go?
It's sort of it depends where in the product, I guess, they're playing. So facility managers use the product quite heavily in an operational sense. To your point around not knowing what to do sometimes as an FM. FM spend 30 or 40% of the time just generating work orders, like just literally writing a work order and sending it to someone managing that process. That's a terrible use of their time. With us, it's okay, how can we pull this data set in and highlight, for example, the work orders that need to be generated, or automatically create those work orders for them into their system, their EAM that they're using, because they've created the same work order for the last 200 instances of this, but that's literally the same thing they do day in, day out. Or in terms of prioritizing, what it's going to cost to do a project here or there, they're using a spreadsheet they got sent from someone who had the job before them, who got sent it from a mate, and there's a lack of sort of standards, I guess, around how these things are really done well. But it's not that hard, and so that's where we're sort of I guess seeing the draw. But then it's, where does this data go? So an FM uses this data, but they then report up to an asset manager, who reports up to a CFO, who reports to a risk committee or something on a board. All of those people as a sort of cohort or a user group use a SETI in a different way and use the data from a SETI in a different way. And so the product is continuing to evolve into, I guess, more of that operational aspect. But take the example of Yardi. In time, a customer, we'd hope they can take data from a system, have it enriched in a SETI, and then generate the work orders in Yardi. Yardi tells us how quickly that was resolved, and we know that actually we need to furnish that, or that work order 30 days sooner for this customer than that one, because they take longer to close it out, as an example. And so that's where it's tailoring that experience to reduce the risk across the organization, essentially cost, risk, exposure in other senses as well. But yeah, that's sort of, they're the cohorts. In terms of the asset classes, a lot of industrial, a lot of government, a lot of multifamily and built to rent in the US specifically, and then the other classes typically as well, like retail and a bunch of others. But yeah, anything that's a big asset we like.
Yeah, don't we all? So also looking at, now let's look at the consumer side of it. How are the consumers attached to this? Like, if do they have any ability or any functions from a consumer side that they could report things that's happening within the building or anything like that back to like a feedback loop to the FMs and all the way up from there?
Yeah, so it's things like as simple as, say, a reporting form or something like that, but it's also using the data on the tail end too. So moving a little away from a person as a consumer and thinking of a tenant as a consumer. In what we do in industrial, part of the product is generating, a 3D sort of model of the asset itself. And so in industrial, tenants are actually using that to plan and organize their internal space in industrial. And a big push in industrial lately has been the sort of vertical extension in these assets. So as rent skyrocketed in industrial, there was a push of, how can we get the most vertically out of this asset, particularly with automation as well. It costs a lot of money to automate a warehouse, so we can get a little bit of additional vertical space. It's not that much more expensive to go vertical, but it costs a lot more horizontally to put automation into a warehouse. And so that's where using the sort of data outputs in a SETI to say, okay, well, I want to arrange my racking in this way. I want to use this for, mobilization of, of automation equipment and things. And so that's where being able to use the data outputs in a I guess a less traditional way is saving a lot of money and time there. But then that's coming into multifamily, particularly the US as well. So using that reporting framework, that reporting tool, to just get that feedback straight into the FM to say, okay, well, 10 people have reported this issue versus, one, maybe it is actually a systemic issue in there, rather than they just didn't know how to replace their light bulb. And it's being able to then help improve that tenant piece. Because to Kelvin's point at the start, the tenant experience, I sort of feel sorry in some senses for multifamily because, or build to rent, because you have hundreds and hundreds and hundreds of stakeholders in these assets, and you have one thing that impacts them, and they all feel that. Whereas in industrial or those other asset classes, you have one tenant, you piss one tenant off, or you annoy one tenant. It's like, okay, I've annoyed one tenant, but I can deal with that. I can help that. Whereas when someone's paying out of their own pocket with their own money, it seems to impact them, particularly when it's their home. It's a much more sort of impactful experience around the operation of the asset.
Yeah, and that's been a tale, for a very long time. It's always been complaints around property management and are not getting to maintenance fast enough, or not preempting maintenance, or not doing inspections to find out what the maintenance are, and not listening to your tenants. Has always been an issue, and especially with the crunch that we got right now in Sydney, especially, some of the quality of these properties are not the greatest as well. So I guess Well, thank you for that, Agnes. We'll go back and have a little bit more chat about this later on. It's definitely an interesting topic because there's so many cohorts of people involved in this. It's from the tenants to the FMs to the asset managers to, like you said, it goes all the way up, and then all the externals that come with it. And I'm sure it's quite a challenge to try and solve for all of them. It's usually hard enough to solve for one. So thank you for that. Now, just a general question for the whole board, and we'll start with you, Kelvin, if we can. If an asset manager could focus on one innovation or priority today to future-proof their portfolio in build to rent and in multifamily, what would you each recommend? Starting with you, Kelvin.
I'm sure we're probably all going to have the same answer, and it's going to be AI. It's a very powerful tool, and Joe alluded to a lot of things of what it can be and what it will be and what it should be. I don't think it should be a focus that this could replace me in my job. I think it's a real way that it can bring a lot of value because you can concentrate on other things. And the same thing with what Angus said, even with facilities management, a lot of that can be automated or, really improved upon by using a really intelligent AI. So I guess the focus is on making sure that you do your due diligence in maybe on what AI product that you buy that's really gone through the right learning management process. And then again, that you actually ensure that you train your AI to work within your requirements or within your rules. But I would absolutely think AI is the future of where people should be looking at and investing and then focusing on your security within the AI, because you don't want to be publishing everything that you've sort of learnt for the whole market to see maybe.
Yeah, and I think that's a fine line, right? Like with AI and enabling AI within your businesses, especially businesses like Yardi. It's so much historical data. It goes back so far. And for one, what are the risks of using it, and two, how would you then use that to leverage for the benefit of the consumer, for the benefit of the business, or all the other businesses around it that try and feed off that data. So yeah, definitely artificial intelligence is top of the list, and a big talking point. But I think it will be interesting to get your insight on how you think companies like Yardi, who are so I guess have such a big legacy and have such big data sets across so many different countries. And I think that will be a pretty intense challenge to solve for a company that size.
Well, I guess we're lucky enough that we have something like 5,000 developers or something globally, or some crazy number, probably 1,500 developers, sorry. And we've been working on AI for about 3 or 4 years from my knowledge. So it's not something that, when GPT came out with this amazing product, we thought, let's start. It's something that we've worked on for a very long time. And so it's got some pretty amazing features in terms of those features have been developed because of those rich data sets that you talked about that we have access to. And what we're doing in AI, there's leasing capabilities in terms of talking to potential clients and customers, and, probably a lot more articulate than I am on the phone, speaking multiple languages, being able to text, being able to email, and then following those rule sets that you put in place. Being able to scan a contract, whether it be a lease document or maybe a construction document, and putting all those caveats and all those legal clauses that you need to be aware of into the system and highlighting them for you, or picking up any fraudulent activity in terms of the accounts payable, and being able to help you like a Siri or Alexa or Google to get those answers that you might need on, how do I change that light bulb? I don't know. So there's lots of capabilities that Yardi has explored within AI, and that's been rolled out in beta in the US, and we very much look forward to bringing it out live in Australia, I think by the end of the year or early next year.
Yeah, excellent. That is very exciting, I think, to hear as well. And I think we're getting to the point where I think artificial intelligence, especially from a consumer experience perspective, I think can make a massive amount of difference. I think we're all used to the whole McDonald's terminology, right? If your burger's 2 minutes late, then you get angry for no reason. It's the same as technology these days. I think we want everything accessible, easy to read, easy to understand, easy to execute. And I think AI will bring that to us as well. I'll just get your opinion on this as well, Joe.
Yeah, for sure. Look, adding to Kelvin, of course, I'm going to say AI and technology, absolutely. But I think the way I would see AI being utilized to be different in future, and this is touching on what Angus kind of is working on or is doing as well. Predictive analytics is huge. So I think one of the questions that we're commonly asked as property professionals is, when's the right time to buy? Should I buy now? Should I buy in 6 months? And we don't really have that answer. Like, the right time to buy is always based on your personal circumstance, right? It's, do you have the motivation, the money, and the want and need to buy? Go for it. That's the right time to purchase, because we can't predict market trends accurately, or historically we've never been able to fully get it right. No one predicted COVID. That's my first example of that. So with that in mind, I think predictive analytics, large language models, and AI combined with automation is key. So imagine that you're managing an asset, or you're doing asset management in a way that you could provide a quarterly health check without manually having to run data and analytics, but it's something that's delivered to your clients on an ongoing basis, or with tenant checks and things that they need to do, like to manage that asset while they're living in it with, build to rent. I think the biggest thing here is, how can you keep that machine running the whole time, factoring in economic values, socioeconomic values, environmental problems, like putting that all into a funnel that feeds into this large data set, and then constantly is giving you a health check on your asset, going, hey, the pollution in the air has actually changed over since you purchased this home 2 months ago, pollution's gone up. Here's some of the things you need to be aware of with, the bricks and how to manage the walls. Or, hey, did you know bushfire just came up in your zone because they've knocked down a bunch of properties and now it's a farm? All these kind of factors, we need to use the data and analytics to predict what could happen and just prepare for those risks and to de-risk the asset from being in strife later. So I think language models do a great job at interpreting. Automation is going to automate all those manual processes that humans currently do, and that a lot of us are starting to find, a lot of benefit with the automation and AI side of things. And then you've got your language models that are going to put that in words and language that you understand at a level you get it, probably in the language you want it to be in. So I think that's where the future is heading. It's that predictability of data and analytics.
Yeah, I think that when you talk about predictability, and especially when you would look at just how many different data sets and how many different organizations are involved in even making a construction decision, right? And you've got environmental factors, like you said, floodwaters, bushfires that impacts the property. And it wasn't long ago, I think it's getting better now, but 5 or 10 years ago, a lot of people who bought properties didn't even know it was in a flood zone, or it wasn't even like a red flag. It was probably buried somewhere down in the inspector's report somewhere, but it was never the red flag trigger. Okay, well, you're in a flood zone, and you got all these issues that could happen. There's a freeway going up behind your fence, for example. And
you'd always find out too late, though. Like, just sorry to cut you off, but like,
that's right.
Insurance industry is a huge one for this. So in Queensland, you buy your property in Queensland and you think, awesome, I got a really great deal. Then you go to insure that asset and you find out it's 6 to 10 grand for the policy because you're in a flood zone and they don't cover flood, and you're in a whole problem if you haven't done your due diligence first. And I think you've said it right, 5-10 years ago, that's the phone call you used to make and you used to receive, going, are you serious? My policy's 10 grand. But now moving forward, we're able to at least have some data around those risks.
Yeah, and I think it's very important that we don't silo those. Like from the Proptech Association's point of view, we sort of advocate for the point that we should not silo that level of data, and we should be open with it and share that kind of data around, simply because at the end of the day, it's the consumer that gets impacted. And when we're not wearing all of our company's hats, we're still consumers, and we wouldn't want to go through something like that as well. Thank you, Joe. Agnes, if we can go to you.
Yeah, I think, if you sort of work through what both Kelvin and Joe said, it's really around the decisioning and the outcomes, using AI to get to those outcomes. And one really great example in PropTech has been digital twins, where I think it's just under-delivered inherently and just been a total flop, really, because it costs a fortune to build digital twins. Then these customers have digital twins they have to maintain, but really they then sit in a platform to turn a light on and off, flicking a switch, basically. And it's like, if you've got $1 billion skyscraper, maybe that makes sense. But beyond that, it doesn't actually help the person who's doing their job get to their outcome quicker, faster, better, more consistently, whatever these things are. And that's the power of AI to any industry, is to get to the outcome quicker. So in Joe's sense, being able to plow through probably more data as well, but also through the context of the buyer's agent being able to give an incredible insight, but to help the person then know that, yes, this is the right decision for me, or as Kelvin's talking about these contract clauses. How amazing. Like you talk to any institutional asset owner, they'll give you 100 examples of where they've been stung by a clause, and they'll be the tenant will tell you the exact same thing with the exact same contract with the same landlord. Like, it just happens so much. But we're biased because this is the solution we're trying to solve for in asset operations themselves. But our solution would be totally hopeless if it didn't help people do their outcome better. So being able to generate the right work order at the right time, or send the 20 issues to the same contractors because that's what's happened. Like, and they're very low value things, but more broadly, it's being able to help, a facility manager do their job better, faster, so that 30% that they do doing the really low value work, they can spend doing more important stuff, because there's more downward pressure in terms of headcount, and optimization, particularly as AI has continued to sort of explode. There's much more pressure on these people as well to deliver their jobs, because their organizations are under financial pressure. And so we need to help them unlock, that's not just us as a business, like we as a group need to help them unlock and do their job better, so that the 70% that they do really, really well and requires their skill set, they can do 100% of the time. And it's a really simple thing in essence.
Yeah. I think we've covered the next question, which is the innovation that we believe will define asset management for the next 5 to 10 years. And I think we've just kind of gone, well, artificial intelligence is going to be, obviously from a technology perspective, readily used. But now let's start looking at, especially from your perspective, Kelvin, and Angus as well, and what you're seeing, actually Joe as well. It's, where do you think the buildings of the future should be in the next 5 to 10 minutes? Are these buildings that are heavy on technology, IoT, remote access? Are they green? Are they helping us towards achieving our emissions offsets for the future as well? So let's just talk about what the buildings look like, and we'll start with you, Kelvin. I think Yadi would see a lot of innovation in this space.
Yeah, and I think you've sort of covered the main points already. So there'll very much be an Internet of Things in terms of your apartment or your building, in terms of being able to manage when the lights go on and off, or access control. And, there's obviously integrations with BMS systems now in terms of tracking energy and everything else. But being able to maybe report on it from a building perspective or from a tenant perspective, and even from a fund management sort of viewpoint, or getting investors and capital, you're going to have to report on these things and have these things in your building to get that capital and to keep building new buildings. So absolutely, I see smart technology and technology being used to a greater and greater extent. And, there's probably things that we haven't even thought about that will be around in 10 years' time, very much improving the tenant or customer experience and the building staff experience.
Yeah, I completely agree. What's your thoughts, Agnes?
I think it'll be driven in time by these assets themselves and the markets they play in. There's a sort of approach of, we build an A-grade office tower in Sydney, so it just needs these 100 spec things in it. But that's not true all the time, and same for industrial or any other asset class. And I think what we'll start to see is AI and data just balloon and continue to explode, and then it'll stabilize again and come to a better normal, certainly much more enriched than it is today. But I think we'll see a wind back, over the next sort of 3 or 4 years, it'll go up. And then as we sort of head towards 5, 6, 7, 3 to 10 years, I think the actual number of data points we get on an asset will be less, but they'll become more impactful. And so that'll be driven by how people use these assets and how it's then changing. So say you move from being a single tenant environment to being multi-tenant, and all of a sudden the facility manager is being called out 20 times because someone's locked the building and the other tenant can't get in, then installing keyless access makes perfect sense there. But installing keyless access on all 10,000 properties that an asset manager owns doesn't make sense necessarily unless they experience that same issue. And so that's where I think like layering in the technology and being able to help asset managers deliver their best internal sort of returns as well is really important. And as these fads come up, like sustainability, I would describe in two ways. I'd describe it as an important thing, and I would describe it as a fad. Like I think making sustainable buildings is a very sound practice. I think some of the drive around sustainability metrics are vanity metrics that people can game. And so it's how can, and if you think through the lens of a facility manager, you have these facility managers who are 30, 40, 50, 60 years old and have been playing in these assets for decades. And all of a sudden they've got to report on sustainability metrics. They wouldn't even have a clue what they are, let alone how to do it. And so that then flows through to actually what a asset manager and owner can get on their green loans. So it's impacting significantly the ability for them to return on their assets, but they're relying on someone who's completely unskilled and uneducated in it and is not given the resources to actually deliver what they need. And that's where there's the ability for sort of systems as a cohort to actually pull that data up to the levels that it needs to be done so that that information can be furnished to the right people, but actually have the correct information as well in that process. And AI plays a part there, human entered data plays a part, sensor data, there's a ton of sort of pieces of information and feedback in there. But there's no one single answer either.
Yeah, and that is so true. There is no one single answer, and I think a lot of the startups in our cohort are starting to work and fixing certain parts of this really fragmented sort of I wouldn't say broken, but I would say it could be done a lot better system. This has got to you, Joe.
Yeah, for sure. And AJ, can you remind me of the initial question again?
Yeah, well, I think we looked at artificial intelligence and we looked at the changes that it's going to make and where it's going to evolve to the next 5 to 10 years. But I was sort of shifting that more towards the buildings itself. Like as a buyer's agent, I guess you would deal with buyers buying residential properties as such. And as you know, for residential properties, there was 7-star ratings that came in that drastically increased the cost of construction, which meant the cost of the price of the house went up. So there's all these things happening, and there's a lot of talk around pricing homes in the future based on how green they are, right? And like Agnes said as well, it's like, well, what does that really mean? Because if we are increasing to like a 7-star, double glazing for everything and all of that, it's actually costing us, or it's actually hurting the environment more to produce these materials to build houses. So as a buyer's agent, what do you see happening? Do you think it will become one of those things where houses are priced due to how green they are?
I think, look, touching on what Angus said, I think there is a fad element to this for sure. I think there's a lot of stuff happening in market with assets in particular of how they're built, how they're constructed. This has existed since, building and construction became, a thing. Like, we're building with mud brick and then that became a bad thing. We're changing and changing. I think the biggest risk we need to watch out for is how often are these changes going to happen and impact property prices to the point where every construction we end up building is out of code when you go to sell the asset later down the track. That's my biggest concern is I build a pergola today in my backyard, I get the permit, I do it all, but then 7, 8, 10 years down the track, that structure is actually not to code at all because of the changing factors. So I think one of the things that needs to come into consideration is, environmental factors are important. I think knowing what the home's constructed of, how it's built and how it's actually, lowering your carbon footprint or, making an impact on the environment is a great thing. But I think not going to the very far end of the spectrum where it becomes something that's unmanageable or unpredictable. And that's the scary part of asset, ownership is in buyer's advocacy, we're just trying to manage risk, make sure the asset grows and that they buy in the right price. I think if I switch gears for just a second to say what would be better suited for that area, would be looking at how do we stop this fluctuation of house prices. That would be my biggest concern, is this: you buy in this period of time, prices are up here, but you buy in the next period, they're down here. I believe that that is the way we regulate the market with different players in it. So like if you look at the US model for buying real estate, they have buyers agents and vendors agents. You can't buy without one party representing you. They tend to regulate their market. They don't have these skyrocketing prices like we kind of do in different suburbs. It balances out because you've got two professionals working for, you know, a common goal. It's negotiate the right price in the right location. Whereas here we kind of have this fluctuation. So then if we're going to add sustainability as a layer to that, then how much higher are we going to be negotiating deals on properties, and what are our consumers and buyers who don't get support from people like buyers advocates going to do in market? They're going to pay the higher price, and they're going to be outpriced out of the market, or they're going to do things like rent for a longer period of time, which isn't a bad thing, but it's going to make it harder for them to get into this market if everything shifts in that direction.
Yeah. Yeah, it is a very interesting thought, isn't it? Like where the property prices in Australia, we are the most expensive on the planet, and it's incredible that we still keep putting things in that would make it even more expensive. And this goes for build to rent and goes for everything, anyone that's constructing in Australia. So I would like to thank you all for your time. That's all we have today, and thank you so much, Kelvin, Joe, Angus, for your incredible insights today. I think it was a great discussion. It's clear that the future of residential asset management is more about just buildings. It's about smart data use, operational excellence, and meeting arising tenant and environmental expectations as well. So thank you as well to everyone that's tuned in, that's live at the moment, and is going to watch the replay later on. It's great to have you here. We hope you're walking away with some fresh ideas and inspiration. Until next time, I'm AJ Chan. Take care and keep pushing the boundaries of Beyond the Bricks. Thank you, guys. I appreciate your time.